is this still an environment where you feel constructive about buying stocks as they fall?
Absolutely, because we have a very proactive central bank. The Fed is doing all that it can. It's really made it very clear that it's taking a dovish stance. It stands ready to cut rates more. Now, this may not stop an economic slowdown. It may not stop a recession, but it should be supportive of risk assets.
Kristina, do you believe that we are due for a recession? Because the yield curve inversion, apparently Credit Suisse says the last 5 times this has happened, it has eventually led to a recession. It's just a question of when.
Well, we're never truly due for a recession. We create events that cause a recession. And right now, we're in the midst of a slow motion accident, which is our trade policy. But at some point, it can be averted. It can still be stopped before we see maximum damage. So I don't believe that it is a certainty that we will see a recession. So much of it is going to be dictated by what Washington and Beijing do.
Craig, has there been maximum damage sustained at this point? Is this 6% or so pullback in the S&P and the Dow enough to say it's safe to get back in there, or are the charts telling you something different?
Dom, so when I go back and I just kind of paint by the numbers with the holistic work that we do at Piper Jaffray, looking at total return, relative strength, and looking at 4,000 plus stock charts. I looked at the numbers here this morning before coming for this interview, and right now I've got less than 30% of all the stocks in the marketplace in any form of an uptrend at this point in time. I've also got about 41% of the industry groups that we look at that are now, at this point in time, making a 26-week absolute new low. So at this point in time, I'll be watching some very critical levels on the S&P 500. 2722, which was your May, June lows of this year. Break below that's going to suggest you're going to get a retest back toward the December lows. And keep in mind, Dom, when you and I spoke last, we're still sitting at a 27.25 year-end price objective, and we have not wavered from that at this point in time. But from my perspective, there are still things that can be done. Are we going to be getting a recession at this point in time? History says that when you do have the inversion of the yield curve, you do tend to see that happen. So if you're just painting by the numbers, the odds have gone up. I wouldn't say it's an absolute 100% at this point in time, but you certainly have to be over 50% at this point in time, just based upon history.
So Kristina, I mean, Craig brings up some interesting points here about the total breadth of the market. And now there seems to be a shift. We're only 5 or 6% away from record highs, yet there seems to be a shift in momentum and sentiment in the marketplace. Is that something that can be corrected relatively easily, or is this something that takes a while to play out, the negative sentiment that we've seen roll over into the markets?
Well, we've certainly seen examples in the past year. We saw a December sell-off, we saw a sell-off in June, and there was a correction that occurred in terms of sentiment fairly rapidly. So it could happen again. And I think that what we need to recognize is that what the Fed is doing may not help in terms of the economy, but it could very much help in terms of markets. And that's really where we've seen that shift in sentiment to a more positive sentiment in the past. The Fed really engineered the market recovery that we saw in June.
All right, so let's say this, Craig. Let's say the Fed can engineer some kind of a recovery. Are there places, if you're waking up this morning saying, what just happened yesterday, where should you be looking for some of these opportunities? Are there stocks or sectors or groups or markets where you think are better opportunities than others, Craig?
Well, Dom, at this point in time, if the Fed can come back in and step up and perhaps cut rates again, but keep in mind that the Fed is not going to be having another meeting until September 18th. So that's a lot of time between now and then to actually see that happen. If we're to see this Fed come in and say cut 25 or 50 basis points today or later this week, I would say that you're going to look at the technology stocks, the semiconductor stocks as kind of a beta on play at this point in time. But again, Dom, I got to stress that this isn't going to be just a solution coming from the Fed alone. There needs to be some fiscal policy changes and stimulus that gets put in place because the Fed cannot do all the heavy lifting on its own.
Just a couple seconds, Kristina. What's your favorite sector right now?
Technology. I absolutely believe that there are opportunities in secular growth in this kind of slowing growth environment.